Are you ready for the Santa Claus rally? Do stocks really go up at the end of the year? What causes the rally to begin with? We'll talk about all this and determine whether or not it's safe to invest in the stock market before year's end. This video is brought to you by Invested Trader. Please subscribe, click that like button, and turn on notifications so you'll be the first to know when we drop new videos. Well, what is the Santa Claus rally? It typically refers to the last week or so of December and stocks rallying into that point through the new year, setting up investors for the month of January. Well, multiple theories exist why this may happen, but since 1969, 34 of the past 45 holiday seasons have resulted in positive returns. Taking a quick look at the S&P 500 today, we see that we are currently sitting at all-time highs, and we are theoretically already rallying into the new year. Now, this could be obviously several reasons. Investors are happy, they're spending money, retail investors, institutions, etc. And we're already having a nice holiday gift by these huge returns. But we'll take a look into it all and see exactly where we sit, the reasons that may be, and see if we can determine whether or not it's safe to buy. So why does the stock market rally? Let's take a look at the daily chart for Apple. We see that it's currently sitting at all-time highs mid-December, fueling the theory that increased holiday spending leads to a Santa Claus rally. Investors and institutions know that holiday shoppers are spending billions of dollars on new technology, clothing and jewelry, toys, and various other gifts and collectibles. When these profits are reported in Q1 or quarter one of the following year, investors can be speculating that increased holiday sales will lead to more profits and thus higher stock prices. That leads into the next theory. Let's look at Microsoft's daily chart. Again, another tech stock at an all-time high, rallying into late December. Of course, Microsoft sells many items that will be purchased as gifts during the holiday season, leading us to believe that theory 1 holds true. But stocks have also been known to increase in January, known as the January effect. Institutions and investors will buy into the end of the year push, knowing that strong companies tend to rise in the beginning of the year, which can correlate as well to the holiday shopping spree. Another valid reason is institutional purchasing. For this example, we'll take a look at SPY, the ETF for the S&P 500. We see that it's currently sitting at all-time highs, which is no surprise based on the previous examples. Institutions also like having the winning stocks on their books, so they'll do a late year buy-in and report to their investors in Q1 that they own the winning stocks of the previous year. This can be somewhat deceiving to the average investor, but there's also tax advantages that can go into play with late institutional buying and selling and rebalancing of the books. We live in unique times with this administration, and the president knows that a single tweet can cause a market rally or a panic drop. Since a lot of games are being played, for this example, we'll look at Best Buy. We see it's also currently sitting at all-time highs. With constant hope and fear based on trade deals that affect our everyday lives and financial well-being, current market conditions play a huge role. Those fears can lead investors to shy away from the market, but so far we've seen optimism, and therefore any good news regarding a trade deal tends to prop up the market. Also, we're currently sitting at extreme low interest rates, and money is still flowing into the economy at a record pace, with low unemployment as well. So it's safe to say that many variables contribute to the performance of the stock market, and it's not easy to point out one single factor. What we do know is that investors and institutions like buying late into December. Stocks generally rise in January, but current world events can affect the overall outcome as well. Buying into the Santa Claus rally does need to come with a sound investment strategy. Are you a day trader looking to take advantage of quick moves? Do you swing trade and look to sell in January? Or do you invest for the long term? Due diligence is needed, but yes, there's money to be made if you have the right guidance and proper knowledge. As always, seek professional advice. but it's just as important to educate yourself. With access to many online tools and programs, there's plenty of resources for the average investor, many being free. That wraps up our video explaining the causes and effects of the Santa Claus rally. Do you want more videos on the stock market, trading, and investing? Of course you do. Please don't forget to comment on this video below and let us know what stocks you are trading for the Santa Claus rally. Also, please do us a favor and like this video, subscribe, and click the bell so that you're notified the next time we drop another video. As always, thank you.